Thank you for listening into our bond investor update. Please pay attention to the disclaimer you find in the presentation. We want to inform you about the changes with regard to the financial relationship between Deutsche Telekom AG and the new T-Mobile US. Please be aware that all these changes are subject to closing and regulatory approval. On page 3, you see what we have taken into consideration. T-Mobile US will face quite some financing needs after closing, mainly driven by change of control clauses in the current financing contracts of Sprint. Since we as DT will become a 42% shareholder, we have decided not to provide additional debt funded at Deutsche Telekom AG level. To put T-Mobile US in a position to fund itself on a standalone basis, we need to make sure that the company has access to the secured debt market. Financing agreements that we as Deutsche Telekom AG have with our banks, especially our bilateral agreements that provide our liquidity backup, do not allow secured funding for Deutsche Telekom AG or its group members. We will amend these in a way that for the purpose of these financing agreements, T-Mobile US is no longer a group company. That will give T-Mobile US the opportunity to access the secured market. However, by the same token, we as DT will no longer be allowed to provide T-Mobile US with new financing. There is one other implication to these changes. Should a credit event on T-Mobile US level occur, this will no longer lead to a cross-default or cross-acceleration at Deutsche Telekom AG. On the next page, you see the current exposure that DT has with T-Mobile US today. This will be reduced in 2 steps. The first step is a significant reduction and will take place already by closing. The $17.1 billion will be reduced to $6.6 billion, and these remaining $6.6 billion, consisting of 5 different bonds, will be redeemed over the next couple of years. On the right-hand side of this page, you see what that does mean for DT and our funding demand. Our funding in 2018 will not be affected by the change of the intercompany funding relationship, so it will be a more or less ordinary course of business. So you will see us in the bond markets to refinance mainly our maturities, not considering any internal redemptions from T-Mobile US, which will most likely happen in 2019 only. However, once receiving the funds from T-Mobile US in 2019, our funding demand will be very, very low in that year. Thereafter, redemptions from the remaining $6.6 billion will ripple in and will reduce our funding need for the coming years just slightly. Moving to page 5. You will know one cornerstone of our financial policy is to maintain a prudent liquidity reserve. Of course, this will not change. We want our maturities of the next 24 months to be covered. On the right-hand side, you see our updated maturity profile, which does not include T-Mobile US maturities, taking into account that they will fund their capital requirements on a standalone basis in the future. On the next page, another pillar of our financial policy refers to our credit rating and the net debt to EBITDA ratio. You see that we have been very stable in our rating, also based on keeping our net debt to EBITDA ratio between 2 and 2.5 times. You will remember that we have always said that we are very considerate of that corridor. But we have said also that a transforming transaction like the merger we have just announced might force us to take a holiday from that corridor for a certain period of time. That is what you see here. Most likely, we will be outside our comfort zone for 2 years after closing of the transaction only. I would like to emphasize that we are committed to get back to the below 2x5 times threshold already after 2 years, which is what we think rather quickly. Of course, we have presented the transaction to our rating agencies in advance, and we have had a very constructive dialogue over the last couple of weeks. You might have seen their respective announcements as well. They come to slightly different opinions, ranging from keeping us at a BBB plus level to one-notch downgrade maximum. So let me summarize. No change to our financial policy. We strive to being back to our leverage comfort zone by 2021. In case you need more information, we are happy to answer your questions by mail or phone. You will find our contact details on page 8. Again, thank you for listening and goodbye.